Well, this morning, the Labor Department released the April employment report.
And let's bring in CBS News business analyst Jill Schlesinger to discuss the results and what we're seeing from this. Jill, good morning. Did the report come in on target?
Well, in the top line, yes. We saw actually a pretty strong report. We had 253,000 jobs created. That was more than the analysts had expected, but the previous 2 months were revised lower. And so you put the 3 months together, we're kind of what the analysts are thinking is happening, which is job growth is slowing down. The unemployment rate, it ticked down just slightly to 3.4%. We have been in this incredibly tight range of 3.4 to 3.7% unemployment since March of 2022. It just hasn't moved much. We saw wages increase month over month. They're up by 4.4% from a year ago. Now, remember, we peaked in wages back in March of last year. The Fed wants wages to go down below 4% because higher wages can often contribute to inflation.
All right, Jill, there was another report that came out earlier this week about job openings and layoffs like we've seen in the tech sector and in retail. What does this say about the overall labor market evaluation?
You know, if you look at the report today and you match it up with this report from earlier in the week, layoffs are on the rise and job openings are dropping down, but everything is still well above where we were before the pandemic. And so, again, I think this really does bring us to a transition point, that the labor market is transitioning from this red hot, awesome market where things are kind of going crazy and moderating some. That said, the labor market is really stronger than most expected, and it's been like the most resilient part of the U.S. economy right now.
And earlier this week, the Feds raised interest rates for the 10th consecutive time. How might this report influence them when they meet in June?
I feel like this report gives the Fed cover for their decision this week. Like, hey, gang, you said it was bad that we raised rates, but you see the labor market is strong. But I think going forward, the Fed would like to see the labor market slow down some. I think they'll wait to see how the data start to come in over the next few weeks. And there'll be one more jobs report before the Fed meets. I still think the most likely path is they'll do nothing at the June meeting, but we'll have to see.
Jill, as always, thanks for the dollars and cents and the financial insight.
Sure.